Folks, we have a bit of a technical issue. Let me figure it out. How about now? All right. Thanks for the sound check, guys. I would have kept talking. On my end, it looked fine. Thanks for the heads up there. So, real quick, I can't believe I did that. Coinbase up after hours on strong forward-looking guidance and expectations. Market maker anticipated move about $20. We're beyond that now. So, uh, call sellers are in a bit of a house of pain right now, and I kind of know their feeling. So, Coinbase looking very, very promising. We spoke about Coinbase going back in January. Did a video on it. It was one of our best stock charts for mid-January thereabouts, and sure enough, it's taken off. So Coinbase is probably going a lot higher on that Q1 guidance. Add to that, it's a mid-cap name. Mid-caps are really looking good this week. It's a mid-cap, small-cap week in terms of earnings. So a lot of headline wind at the back, if you will, at these names. So I'm liking Coinbase moving forward. Now, looking at the economic data that came out on Tuesday, CPI came out hot at the core, on the headline, year over year, month over month, just a hot number. And that pushed out the probability of a rate cut, which was well over 50% for March. Now it's down to only 10.5%. At one point, this was 80%. May, we're not even above. We were at 100% at one point. Now, less than 50%. Yet the equity markets are continuing up higher. So what do we interpret about that? I think that if yields stay as is or go lower, or even if they go up slightly, equities can continue to rally. Now, we're going to talk a little bit about sector rotation in a while, but keep in mind that the expectations for a rate cut should be the fact that there's no expectation for a rate cut until maybe June. That should be the death knell for the small caps in particular. Yet the small caps are outperforming the triple Qs. They're outperforming the XLK. Mid caps doing the same thing over the past few days. So something's up there. There's a pent-up demand, meaning I think that there's the mega cap names have gone too far too fast, and now the street is looking for money to rotate into other names that are looking to play catch up. Now, that's what you call a dash for trash. I'm not banging all of these stocks, but that's what generally happens when you go into a market that's getting long in the tooth in terms of a bull market. I'm not saying we're going to crash. I've been a bull for a while now. I think we're going to continue up higher until we don't. So yield probabilities of a rate cut not likely in the foreseeable future. Now, here's the problem, is that the S&P 500 is really priced to perfection. Can it go higher in terms of PE multiple? Sure. It's been there before. It was there a couple of years ago. It was there in 2000. Can it get it back up there again? Yeah, why not? So the equity market can continue up higher. You're just going to have a different set of participants helping drive the market up higher. It's probably not going to be Apple. Apple's a laggard now. I don't want to buy Apple. I want to buy the Coinbases of the world. SMCI pulls back to a nice support level after this big move up higher. I want to buy that stock. It's got great fundamentals. So more to come on SMCI in a little while. Now, in terms of news, I don't have much to go over. There's not a lot to go over out there. So let's just stick with the charts for now. And I want to talk a little bit about SMCI, because this stock, here's what I had to say last night about, let me make sure I have the audio on here, about SMCI. I did this short. I went over this last night. These shorts are clips out of Market Wrap, but just send out to members. But I think this is pretty prophetic. Profit. SMCI, again, we've traded more already by the end of business on Wednesday, more of the float in 1 week. So hardly just purely institutional money. There's a lot of speculative fervor in here. And when this goes, look out below. And honestly, I thought the spike up this morning was going to be the top. And that's why I put out that video earlier in the afternoon when I saw the pullback. I said, okay, it looks like this is a little bit of a parabolic blow off top. But no, it wasn't. So back to the futures. It looks as though they're going to open this up above 900. Honestly, I thought the spike up this morning was going to be the top. I think we're going to 1,000. That's probably where we're going to go. They have to touch it now. So where do they take it after hours? Not only above 1,000 on SMCI, but they hit at least one analyst price target of 140 in the after hours session. So they're bidding it up in the after hours. What I see a lot with SMCI is that the institutions, they what they'll do is that they'll bid up the shares after hours, and then in the pre-market, they'll do the same thing. Like when the markets open up for the institutions, that's at 4 a.m. We have access at 7 a.m. as retail investors. Now, when I woke up this morning, they initially took the shares down, but then bid them back up. And we were well above. I mean, they closed out the day at what, 900 yesterday? 880 yesterday. And they opened this up this morning. Were the openers at 9:45? Crazy. So we'll see at 4 a.m. this morning or tomorrow morning what the institutions plan on doing here, because it's definitely a manipulated stock. It's a low float stock. So if you're wondering why is this stock continuing to press up higher without a breather, it's easy. It's a low float stock. So I thought I was being wise with opening up a short position at RSI 92. But being that it's a low float stock, it can go up higher longer than you would like it to. So what we did here is that I sold a call spread on SMCI. So my cap on losses is at 880. So right now, I'm pretty much maxed out in the amount that I could lose on the trade. But in terms of profitability, we get a 10, 15% pullback, and we're in the profit zone on it. So we did sell puts here as well. We're up on the sale of the puts. So not a great trade so far, but the fact that we are at ridiculously overbought levels, that we've hit multiple price targets on the street, and we have that $1,000 price target out of the way now. That was like a big bullseye. I knew the street had to touch it. They had to touch it. Now it's just conversations in the rearview mirror. Now they need to hold it. So taking a look at the weekly view of SMCI, I mean, RSI weekly time frame 92.55, and this is now what, the fifth week? 1, 2, 3, 4, 5, sixth week of trading up and above the third standard deviation Bollinger Band in red. You're not supposed to be there, but we are. So this is not going to end well. That being said, I would not rule out that this stock can go up higher tomorrow. It'd be foolhardy to say it can't. So it's a thinly traded stock. If you're thinking about shorting the common stock, I tried it for about a day, and the stock moved. And I said, you know what? As a matter of fact, I sold a put. So I had a covered put. And the way it moved, I said, you know what? That's not going to work out. So I converted that covered put into a call spread, and that's where we're sitting with it right now. So we have time on our side. So we have until the 22nd of March for the shares to correct it's got to come in about 150 points thereabouts, and we could book profits. And the 150 points, it's moved that in the past 2 days. So weekly chart, very overbought. Daily time frame, RSI 96.79. I mean, I've only seen this type of RSI a couple of times before, and that was on GameStop. It was also on back in 2017, low float stock, Fizz, F-I-Z-Z, National Beverage was the company. And here we are yet again with another one of these names. So any pullback here, we're going to look to close out the trades. Too low float. Doesn't make sense to fight it. So I'm sure we're going to get a pullback in the next couple of days. This time next week, we'll probably have at least a day or two of a measurable pullback, and we're just going to exit the trade. So taking a look at an intraday view, and here's our Fibonacci retracement levels. I'm thinking that we're probably going to retrace down to the 705 mark on SMCI. That may change depending upon where we top out. In fact, I know it's going to change because we're up in the after hours session. Now, looking at the 4-hour chart, I mean, this is just completely bananas. 80X line, overbought is above 55. It is now at nearly 80. So crazy, but the volume, today's volume was the highest volume bar in history on the stock. So there's only about 50 million shares that are out there to be traded. And the stock is traded one day, half of that float. So this is not just purely institutional players that are just buying and holding the shares. You have a lot of speculators out there. And I know there's speculators out there because you take a look at the number of calls that are bought. It's ridiculous. So what does that force the market makers to do? Well, the market makers need to go out and hedge their book and buy the common stock. And there's not really a market for the puts right now. So it's really strange, really, really strange happening here. Rarely do you see the call options more expensive than the put options in terms of IV rank, but guess what? They are. So a very, very powerful chart. And congrats to those who are long of the stock. And I feel your pain if you're betting against it, but this is going to come in fairly soon. Jody, welcome. TZ Burton, welcome. All right, another trade I want to talk about is nat gas. Now, natural gas is what you call the widowmaker trade. And we're looking for an opportunity here, and that's to buy natural gas. The question is, where's the bottom? And I think on the continuous contract, we have support at 1.5, the cubic ton a meter, however they sell it. So we're looking for that to be support level number one. I would not be a buyer yet. I would look for the bounce, and I would look for a close above that mark like we did back in 2020. We had that rip your face off rally, and that can happen again. But we're going to need some consolidation, and then we're going to look to put on a long trade here on natural gas. And in all probability, our vehicle of choice is going to be Boyle, and that is a leveraged product. I know one of our members sold the 10 puts. Nice call there. March, they expire in March. I forget the date, but a good trade. I like the call. So natural gas looking very interesting as a potential long. Now, looking at the overall market, you know, we like to take a look at ratios, relative strength. Who's got the relative strength? And things are changing a bit. And what I mean by that is that for the longest time, you've had the Magnificent Seven names rallying, and by far the leadership names. Now, however, things are beginning to, at least in the short term, change. And let's go through a few of these. And we'll begin with the 10-year yield, believe it or not. 10-year yield over the past couple of weeks has broken out of a declining wedge formation and is pressing up higher. If there's any threat right now to the overall market that should concern anyone, is that if we get a spike up in interest rates, that's going to be a problem. Now, tomorrow we're going to get the PPI index that comes out, and that's going to tell us whether or not we have inflation at the producer level. Now, if we get inflation at the producer level and we have it at the consumer level, that means that you have more inflation in the pipeline coming out in future months. And don't forget that you've seen in the past couple of weeks, oil has been up. This is a daily chart. Let's go to the weekly chart. Oil, strong week last week, continuation breakout this week. Gasoline prices, they were up 19% last week. They're down slightly this week, but they did put in a new higher high. Look at this base from which gasoline is ready to break out of. So for those that are worried about CPI for January, which was reported on Tuesday, if you see a continuation breakout here on gasoline and oil, wait till you see the February report, which comes out next month. It's going to be scary because this spike up higher in gasoline was not included in this week's CPI report. That was for January. Now, going back to what appears to be changing in the marketplace are relationships. Again, Bitcoin clearly outperforming the S&P 500. This is where money is flowing into crypto. Bonds underperforming. Tips are looking interesting to me. They're underperforming, but they have really reached the stretching the lower band of support. Now, if we get weak economic data like we did today on retail sales, that may force the Federal Reserve to say, okay, you know what, we gotta come to the bat of the market here. And if they do that, that is going to unleash the hounds of hell on inflation. So if the Federal Reserve, if the expectation for the Federal Reserve is that they're going to ease sooner than June, or the June probability rises, and you have inflation which is increasing, you're going to have a difficult time for this market to continue up higher. A very difficult time because the consumer is going to get destroyed by inflation. Gold, though, is going to do very, very well. The dollar. Now, the dollar is up relative to the S&P 500. The however is it took it on the chin today. Volatility relative to the S&P 500. Up on the week, attempted a breakout. No luck yet. One trading day left to go. Dow Transports down versus the S&P 500. Dow Jones Industrial Average. It's getting ready to break out relative to the S&P 500. So what's looking strong here? Energy, industrials. How are the Qs looking relative to the S&P 500? Not good. They stalled out back in mid-January. They have not been able to break out relative to the S&P 500 in almost a month now. And that was unheard of for quite a while. What else is doing well? We spoke about this on best stock charts for the new trading week, and that was mid caps. This is MDY versus the S&P 500, and you could see a beautiful back-to-back move up higher. No breakout yet, but we are potentially at the beginning of a major move up in the mid caps. What could hurt the mid caps? Rising interest rates. As for small caps, very similarly, mid caps in that they're performing very, very well relative to the S&P 500. And the small caps had an awesome day today. Let's take a look at them on a standalone. We own TNA in our portfolio. That's up over 6% on the week, and on the day today closed up over 7.5%, closing at the highs of the day. Very strong price action, great volume action. So it's clear that the markets are saying, hey, listen, looks like the money's going into small and mid caps, going into the industrials, not so much the triple Qs, Mag 7 names. Take a look at names like Apple. Apple, a laggard, not doing well at all. Semis, they're down on the week relative to the S&P 500. And they were the leadership group. I mean, even NVIDIA was down today. XLK, technology versus S&P 500. It's in a consolidation. It's not broken by any stretch of the imagination, and it could certainly break out and continue up higher. But it is at current underperforming the S&P 500, and you're seeing on this chart as well. And I want to point this out, and it's probably on several other charts, is that you're seeing a bearish divergence. RSI is making lower highs and has been for quite a while. Same deal here, stochastics. Now, what do these mean? They're just momentum indicators. So we're losing momentum on the technology names relative to, look at this, MACD lower highs as well, relative to the S&P 500. So does this mean that stocks can't go up? Sure, it just depends on which stocks, right? It's a stock picker's market at this point. Thank you. Yes, thank you for reminding me. And like, subscribe, please. Thank you very much. LABU. We own this. Higher lows. This looks like it wants to break out higher. Great chart. Loving it. LABU looking very strong. Staples. Not horrible, but not outperforming. Not ready for our money yet. Discretionary names. Not ready for I hate the consumer. As an investment, not as an individual. Emerging markets. Really looking good here. Look at this. Look at this congestion zone or compression zone on emerging markets relative to the S&P 500. This looks like it wants to break out. All you need now is for the US dollar to correct. Energy, getting ready for a breakout relative to the S&P 500. Oil, we already went over oil. We did gasoline. Natural gas, don't bother. Not yet anyway. Gold, not ready yet for prime time. Gold mining stocks, avoid right now. Silver, same deal. Netflix continues to outperform. Really, really big breakout this week on Netflix. Microsoft, a laggard. Largest company in the world by market cap. Meta, continuation breakout, very strong relative to the S&P 500. So those names are working. Amazon, not working. I didn't come equipped tonight with a lot to go over. So we'll just do some chart requests. I'm probably going to make it an early night tonight. And I have a few names to go over. And let's bring up, first one is going to be Google, Alphabet. And if you want any symbols for me to go over, please let me know. CNX, you got it, Jeff. Google's setting up nicely here. It's a down week, but it's the setup that matters. I wouldn't be a buyer here yet, but it's holding at a volume shelf. Let's go to the daily chart. We broke support today. I got to avoid it right now. I got to avoid it. I wanted to be an optimist here, but it broke down today. This is a laggard. Unfortunately, laggard. So we're going to pass on this. Oxy. I think Warren Buffett added more Oxy to his portfolio, and this looks really, really good here. He's got to have a technician on staff. I mean, beautiful breakout off of these fractal trend lines, RSI moving up higher. Energy stocks look the bomb right now. They were lagging oil, but finally they broke out today. So Oxy looking very, very good. I'm a buy here. Let's just take a quick peek at the XLE. Beautiful breakout here on a daily time frame. XLE, we broke out. Good. I think we need to get a pullback on the XLE down to around 85 bucks a share. I'm a buyer on the XLE. For Jeff, CENX, Century Aluminum. Materials have been back and forth of late. So you're in a wedge formation here, Jeff. It could take a couple of more weeks to resolve itself, but ultimately, I think this is going to get resolved to the upside. And the way I'm looking at it is that if you have emerging markets which are rallying, if you have the manufacturing sector here in the United States getting ready to rally, which it appears to be doing relative to the S&P 500, then what are you going to need? You're going to need copper, you're going to need aluminum. And for that matter, I want to take a look quickly. I don't know the symbol for copper. Let me go to the continuous contract. Yeah, even copper is up on the week so far. And this thing's been in a bear market. No breakout here, no reason to go buying. But it looks like it's time to really take a look at the materials names. BHP still in a correction. So I'm a buyer here. As an investment, I don't see a quick trade, but as an investment, sure, why not? Good bullish reversal bar off the lower band of support today. You got a lot of overhead supply here. You're going to need to be patient, but it's looking good. From if you're looking to open a position or add to a position, I'm good here. As a matter of fact, we broke out today. Good stuff. Let's go to Crocs. This is one of our best stock charts for the new week. We'll be putting out a new best stock charts on Saturday. So if you're not currently on an email list, enter your email address in any one of the opt-in email lists you find interesting below, and you'll get it in your email box. It's free. So Crocs, beautiful breakout here on the week, assuming that we close above 120 per share. So Crocs looking very, very good on a weekly time frame, daily time frame. Beautiful breakout on the day. What are we up? Over 4.25% on the day on volume. I'm a buyer here of Crocs. Good stuff. I don't think I have much more. Guys, if you have any symbols you want me to go over, let me know, and I'll go over them. Other than that, I think we're going to call it an early night tonight. Here's my watch list. What do we have on our watch list? Oh, Fiverr was on our watch list from last week as well. And it's up on the week. It's off the highs of the week, but this is still looking really, really good. Really, really good. Higher lows. We broke out last week, retest this week. I mentioned this on best stock charts for last week that we should expect this pullback. We got it. This is looking very, very good. LABU, we already went over. That's looking strong. That was on our best stock charts list, along with mid caps and small cap ETFs. LABU. This is looking awesome. Looking awesome. Weekly chart. Look at this consolidation. Bullish key reversal bar. Daily view. A little bit of overhead supply above, but it looks like the biotechs are beginning to break out. Do you feel like ratio charts tell you more than just a plain old chart of a stock? Yeah, I do, because what it does is that, a lot of times people take a look at they take a look at the market, and it could be that the market is just gyrating sideways, which for the most part, the markets generally trade sideways. 70% of the times they're trading sideways. But within that gyration, you have bull markets that are going on. So it's a matter of segmenting out each individual sector and saying, okay, what's doing well, what's outperforming the S&P 500, which maybe is going sideways, but you're going to have individual sectors that are moving up higher. They're under accumulation. And then you want to find the top stocks in those sectors and then go buying those names. That way, you're not just sitting in the market trading sideways, waiting for the next boost up higher, waiting 6 to 12 months for a big breakout. Whereas you could just simply be buying a leadership group that's in a bull run and it's just not being paid attention to. I rarely hear that. I'll accept that. Thank you very much, Jeff. All right, guys, if there's nothing else, I'm going to call it an early night tonight. And I am going to say, everybody have an awesome, profitable trading day tomorrow. And members, I'll talk to you then. And everybody have an awesome weekend. Be well.